So, welcome to today's presentation. My name is Peter Joseph, Senior Market Analyst at IronFX. In front of your screens, you have right now Euro USDs for our chart. Mind you that all charts to be presented are to be of the same time frame, unless otherwise stated. Now, we note how Euro USD has been in downward motion, and we will be witnessing this practically in other pairs, major pairs as well, indicative that the weakening of Euro USD may be more a result of USD strengthening rather than Euro weakening. Now, for the time being, we definitely have to switch the 1.0890 from a support line to resistance line, given that the price action has moved above it. Below it. So we're going to be searching for a new ultimate support level. Let's lower the former R3 and let's go hunting. Now we have one here, however that's pretty close to the price action. I would like to go further down. And we have a nice support level here. Note how the pair in its upward movement corrected lower, found support at this level, and that was used as a platform to jump higher. So we're talking about the 1.0610. Let's readjust the chart and correct the levels as well. Starting with the R3, which is now placed at 1.1040. The R2 at 1.0982. Actually, this could be rounded down to 80. By the way, feel free to suggest any trading instruments you would like to have a look at and perform a technical analysis on them, just to see where they're heading to. The R1 now is being set at 1.0890. The first support line being set at 1.0795. Second support line at 1.07. And third support line at 1.0610. That's it. So for the time being, we tend to maintain a bearish outlook for Euro USD, given that there is a downward motion, which is also characterized by now a downward trend line showing us the limitations of the downward movement. At the same time, we note that the RSI indicator has slightly bounced on the reading of 30, highlighting the bearish sentiment of the market for the pair. So overall, we tend to maintain our bearish outlook as long as the downward trend line remains intact. For the time being, note how the pair is forming clearly lower highs and lower lows. And we set the next possible target for the bears at 1.0795, a level which provides support once, twice, 3 times here, but also here, but also worked as a resistance. So it's pretty valid. It was tested on both sides of the aisle. Next possible target for the bears could be the 1.07. Overall, we are talking about 45 pips drop until the S1 and 135 pips drop until the S2. For a bullish outlook, which seems to be a remote scenario for now, nevertheless, it's possible it should be covered. We would expect the price action of Euro USD to initially breach the prementioned downward trend line, exactly signaling that the downward motion has been interrupted. Breach also the 1.0890, and that was a level which provided resistance once, twice, so that was pretty valid as well. And start aiming for the 1.0980. Okay, let's have a look at USDJPY. Now USDJPY, this is the 4-hour chart. Allow me to switch to the daily chart. That would make the whole situation more obvious. We have a clear upward movement. That cannot be disputed. But the the interesting element of the pair, in my opinion, is the fact that the price action or the bullish movement was accelerated during today's Asian European session. We have a long green candlestick right here, aiming for the 150.80 resistance level which provided resistance here and here. So that tends to remain quite bullish. Let's have a look where that could go should the R1 be broken. There's another level here, which is also an all-time high at 151.90. And given that we're talking about a practically all-time high, allow me to move back, way back. And we have to go here about 30 years back to actually find something. 2004, 2003, 2001, 2000, 98, 96, 95. Here you go. So we have a resistance up here. Now that's 151.90. Could go 95. Let's have a look. Yep. Readjusting the chart. Now let's have a look how valid such a resistance line actually is. It seems to be within the corridor set by the price action. And we're going to be searching for another level. Once again, weekly chart this time. Unlocking it. Let's go back. Daily. So we have a resistance line which is way off, somewhere here. At the 153.80. Yep. In red. Readjusting. Let's correct the former resistance line, which have now been turned to support. Okay, and let's now drill into the 4-hour chart. Readjusting it. Let's reposition the labels and correct them. Starting with the R3 being set at 153.80. The R2 at 151.95. The R1 at 150.80. The S1 at 149.78. The S2 at 148.60. And the S3 at 147.40. Now let's discuss how we found the prior resistance, the new resistance lines. Definitely the R1 is pretty obvious. We have continuous touches right here. And that was actually aimed for during today's European session, but the pair corrected lower just short before testing the R1. So that seems to be pretty valid. I'm keeping that. At the same time, we note the 151.95 as a former all-time high. Okay, it wasn't an actual all-time high. The level had not been seen practically since 1993. Yet the question arises now, how do we find the R3? Now, we took a mixed approach. On the one hand, we saw former peaks which date back 30 years. The question which will be set by any individual trader would be, and it's logical, how valid could be a 30-year resistance level, a 30-year peak today? And actually, it's not, but it's indicative. And despite being a little bit wider, the corridor between the R2 and the R3, given that there is an intensification of the upward motion, the 185 pips corridor seems to be pretty much okay. So I'm keeping it. For the time being, I would expect the price action to the downside, though, to remain inactive. For the time being, we tend to maintain our bullish outlook, but note two elements. A, you have the RSI indicator, which has been in an upward movement, but has surpassed the reading of 70. On the one hand, that tends to showcase the strong bullish sentiment. On the other hand, though, maybe implying that, give me a sec, here you go, maybe implying that the pair has reached overbought levels and may be ripe for a correction lower. Now, we're getting similar signals also by the fact that the price action was able to surpass the upper Bollinger Band. Now, statistically speaking, the fact that the price action has breached the upper Bollinger Band should force the price action lower to come within the bands. And I would be also noting the fact that the 20 moving average maintains a clear upward inclination supporting the price action. So you have one, the trend line, two, the RSI, three, the price action against the Bollinger Band, four, the 20 moving average, which is the median of the Bollinger Bands. All of that tend to point towards a continuation of the upward motion. On the other hand, though, once again, I'm highlighting that the price action has surpassed the upper Bollinger Band, and the RSI indicator is quite high. It's actually at very high levels, above 70, which also tend to send a warning that the correction lower could be in the cards for the pair. As long as the upward trend line remains intact, we tend to maintain our bullish outlook. So for the time being, once again, upward motion possible, and should the upward motion be maintained, then we would require the pair to breach the 150.80 and start aiming for the 151.95. At the same time, though, we may see some difficulty on behalf of the bulls to actually proceed higher, given that the R1 is a pretty strong resistance line, and 2, the price action has surpassed the upper Bollinger Band and a little bit lower, allowing for some distance between the actual price action and the upper Bollinger Band to be created. Okay, let's have a look at GBP USD. GBP USD maintains a very similar picture to Euro USD. You can see how the downward motion is in play here. And interestingly enough, we have to switch the role of the S1 to a resistance line. And the S1 as well. Now let's go hunting for a new ultimate support line. One could be set here. There is one throw here, however, I'm going to be setting a little bit lower, seeing this throw here. And that would be set at 1.2515. Let's unlock the chart and go further back. Note the continuous testing of this level here and to the upside partially here. I'm keeping it as a support line, and that's the 1.2375. Sorry, that should be in green. Let's correct the labels as well. Now, on the fundamental side, we expect the pound to be influenced by two elements, and that would be the release of UK CPI rates and at the same time I would be noting, or if you prefer, I would be highlighting actually BOE's interest rate decision on Thursday. The bank is expected to remain on hold. That's not the big question here. The big question is the tone of the accompanying statement. And I would expect the bank to actually maintain a rather hawkish tone. I'm placing my expectations practically on the fact that the CPI rates are quite higher if compared to the bank's target of 2%, and they're still higher despite a considerable slowdown. So I would expect more or less the bank to maintain its hawkishness, and if actually so, could provide some support for the pound, as could any acceleration of the CPI rates. It's a big question. And on the flip side, should the CPI rates actually slow down further, we may see the pound slipping. For the time being, we tend to maintain a bearish outlook and set the next target, the next possible target for the bears at the S1 1.2615. Note how the level provided support once, was aimed for here, supported twice, 3 times, but those was also tested to the upside here. So that's a pretty valid level. Should the S1 be breached, the next possible target for the bears could be as low as the 1.2515. It could go even a little bit higher. Yeah, 1.2520, sorry. Okay, let's have a look at USD CAD. USD CAD, which is a very interesting pair, given that we have also the release of Canada CPI rates today. And the headline rate is expected to accelerate. Should the acceleration be materialized and possibly also be accompanied by an acceleration on a core level year on year always, we may see the CAD getting some support, forcing USD CAD lower. USD CAD, which for the time being seems to maintain an upward motion, you can see how it has marked higher shows and higher peaks. An upward trend line has started to form, yet it's quite fresh. So it's questionable for the time being. If we drill into the daily chart, the picture differentiates itself as we have a wide sideways motion between the R1 and the S2. Back to the forward chart, readjusting. Let's go hunting for a new ultimate resistance line. In red, and we're talking about the 1.3840. We're adjusting the chart. R2 to be set at 1.3695. The first resistance line is pretty clear at 1.36. The first support line, on the other hand, is at 1.3505. Second support line at 1.3435. Could go a little bit lower, 5 pips or so. And final support line at 1.3320. For the time being, we tend to maintain a bullish outlook for the pair, and we are basing that practically on the upward trend line. That's clear. So as long as the upward trend line remains intact, we maintain our bullish outlook. We also note that the RSI indicator has reached almost the reading of 70, which tends to imply a strong bullish sentiment. yet the pair does not seem to have reached overbought levels just yet. And we have also the trending moving average, which has started an upward inclination since around the 12th of March, 12th to the 13th. So all of that tends to imply the continuance of the bullish movement, possibly breaching the 1.36 resistance line, and that would pave the way for the 1.3695. On the flip side, should the bears take over, we may see the price action of USD CAD dropping, breaching the pre-mentioned upward trend line. But I would require also a breach of the S1 1.3505, as well as the pair to test, at least test, if not breach, the 1.3435. The reason I'm setting the S2 as the cutoff point between sideways and bearish is the fact that the level was tested once, twice, 3, 4 times. It's a very valid level. So I would require a clear break before actually switching my bias of a sideways motion in favor of a bearish outlook. Okay, let's have a look also at the Aussie. AUD USD dropping, breaking the 0.6595, breaking also the 0.6535. We definitely have to find new support levels. So let's turn these into resistance first. Let's go down. Unlocking the chart, back to the daily chart. Okay. So what I did is practically highlight this support line and allow me now to drill back to the 4-hour chart so we get more details on that movement. Here it is. Let's go further back. Could go higher. 0.6475 is the first support line. That's locking in. You can see the touches here. And let's go back to see the validity once again of the S2. You can see how there is a resistance line and support line at the same time right here. So that tends to be my second support line at 0.64. Let's check this out first in detail. Yeah, it still holds. And the last support line being set at 0.6340 was tested here. It could go even a bit lower, but I'm going to be keeping that as the next possible support line in green. Okay, let's readjust the chart. Reposition and correct the levels. Actually, I'm going to be raising a little bit the R3 at 0.6665. The R2 at 0.6595. Let me verify that. Yep. The R1 at 0.6535. The S1 at 0.6475. The S2 at 0.64. And the S3 at 0.6340. Now we have a clear downward motion. Note how the price action has started to fall right here. But I would expect that there has been a steepening of the downward movement, which should not be neglected. There you go. The RSI indicator has reached below the reading of 30. On a fundamental level, we have to note here that the downward motion of AUD/USD may have also been attributed to today's RBA interest rate decision. Now, the bank remained on hold as was expected. That was not the question. The question was the tone of the accompanying statement, and the bank in its accompanying statement practically tweaked a bit its hawkishness, more or less allowing for an element of uncertainty to enter the decision about whether there is a need for further monetary policy tightening. On the contrary, it seems that the bank is orientating itself towards keeping rates at the current level, maybe for a longer period. But despite the bank actually not excluding per se the possibility of another rate hike, I would say that it slowly is drifting away from that scenario. And that caused the Aussie to weaken during today's Asian session. We maintain our bearish outlook. Some correction lower is possible given that the price action has breached below the lower Bollinger Band. While the RSI indicator has dropped below the reading of 30, both indications seem to imply that the bears may have a little bit overdone it. So a correction higher could be in the cards for the pair. It's not necessarily so, but there is a good possibility for it. Yet the bearish sentiment is very, very present. And I would expect the pair to start aiming, if not reaching, the S1 0.6475 as the next possible support line level, which was tested here, here, and here. Should the S1 be breached, that would be a clear indication of a continuation of the bearish movement, maybe even an intensification of the bearish movement. For a bullish outlook, we would require the pair to rise, breach the R1 0.6535, breach the pre-mentioned downward trend line, exactly signaling the end or the interruption of the downward movement, and aim, if not breach, the R2 0.6595. That should sum it up for the day. From all of us here at IronFX, Best wishes for solid trading.
Okay, let's go ahead and get started. So, welcome to this week's webinar. Today, we're going to be talking about the last part of our Fibonacci series, which will be on projections. So, as per usual, before we get started, a risk warning. So, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay. I'm Melanie. I'm an investment analyst from Everest Fortune finalist for Best FX and Equity Research in the years 2019 to 2021. And I will be your speaker for today. So here's today's agenda. We'll do a brief recap on a Fibonacci retracement, the ideal market structure, and then we're going to look at the different Fibonacci retracement levels, and then we'll dive into this week's topic, which is on Fibonacci projections, and then we'll look at how we combine what we learned from the previous weeks and what we're going to be learning today on Fibonacci projections. Okay. And if we have time at the end, we'll also be looking at some charts. So if you have any requests, feel free to pop them into the chat. Also, if you have any questions throughout the webinar, feel free to let me know as well. Okay, let's get started. So here's a simple checklist to follow when first starting out with Fibonacci retracements and some things that you can look out for. So firstly is the market structure curve. So you want to be looking for big zigzags, and we'll show you examples in the coming slides. Next, we're looking at how we can identify the recent trend. So are prices going down or up? And our typical advice is to always follow the general trend. Next, identify a recent major swing low and recent major swing high. So we'll show you examples, but basically you want to look for the most significant swings when you are deciding which charts to use. Next, you want to connect the two extreme points, the highest to lowest if you're looking at a downtrend, and the lowest to highest if you're looking at an uptrend. like you see here in this image. Okay, so let's first look at an incorrect example. So here's an example of an insignificant swing, which are typically bad points to use for Fibonacci starting and ending points. Price movements here are too small and there are no significant swing highs or swing lows. So you can see we're drawing out the shape, and this is the kind of shape that you want to avoid. Here's another incorrect example. You can see there isn't really any clear shape, even though you can see that the general trend is downwards, but there's no clear swing highs or lows. Price movement is also pretty small. Okay. Okay, now let's look at some correct examples or things that you should be looking out for. So here's an example of significant swings. You can see that there is a clear move up and down with obvious peaks and troughs, and also there are clear market movements. Okay, here's another example. So I've drawn out the peaks and troughs to point out exactly how clear your market structure should look like. Okay. Okay, next point, we want to make sure that you are following the market structure. Okay, here is an example of how not to draw your Fibonacci retracement trend line. So your Fibonacci trend line must follow price structure clearly. In this case, you can see that there is a zigzag market structure. The retracement drawn here cuts through the market structure, making it less effective. So when drawing your trend line, you want to follow price movement and not deviate from it too much. Okay, so something like this, you want to pick market structures with clear upward or downward movement and something that follows price movement. This works better on higher time frames, as there tends to be less noise. So higher time frames could be one 1 hour to 1 hour, 4 hours, 1 day, 1 week as well. Okay, so here's an example again of a clear market structure. So Fib tracements can be used in both choppy and trending markets, but it is important to look for clear market structures. Okay, so if you look here, there's a lot of upward and downward movements. So that's what we mean by choppy and trending markets. But the main point is to make sure that your market structure is clear. So here's an example of an unclear market structure. So once again, it is choppy with a significant drop here, significant highs here, but you can see there isn't really a clear market structure. Okay. Okay. Now, these are the Fibonacci numbers that we typically use. So if you've been here for our previous Fibonacci webinars, this will look familiar. But basically, this shows you how you draw your Fibonacci retracement trend line and also the different types of levels, ranging from the negatives to levels that are greater than 100. So the tool that's used is a Fibonacci retracement tool, but it can lead you to 3 types of Fibonacci techniques. So previously we talked about the expansions, which are the negatives, the mid-range, so 23.6 to 78.6. Those are called the retracements, and those greater than 100% are the extensions. So we went through these in our previous webinars, But if you'd like me to briefly go through them again, feel free to let me know in the chat. Okay, so here you can see all the different Fib numbers that we mentioned in the previous slide and how it looks like on a chart. So just to recap again, mid-range is retracements, negatives are the expansions, and 100% are, or greater than 100% are the extensions. And in all of these scenarios, we are only using one tool, which is the Fibonacci retracement. Yeah, I think it is recording. I think they might publish this webinar on YouTube as well, so you can go ahead and check it out. But if it's not on YouTube by I think the end of next week, you can email IronFX and they'll help you out there. Okay, so let's move on to this week's topic, which is the Fibonacci projection tool. Yeah, you can find me on LinkedIn. I'll pop it into the chat in a little bit. Oh yes, I also wanted to share with you guys this website. So if you're new, when it comes to Fibonacci's, okay, you can go on to the forexarmy.com and it shares exactly how to draw Fibonacci retracements, and watch a bunch of videos, extensions, and it shows you an in-depth instructions on what to look out for. So you can see that we recently talked about the unclear market structure, and now this shows you an unclear market structure from an M15 view can actually look clear on an H1 view as well. Yeah. So this area here that we've highlighted is the market structure that was on the M15 view. And yeah, so just because it looks unclear on one time frame doesn't mean that it's not usable. So yeah, you can feel free to pop this to check this out after our webinar. Okay. Yeah, so let's get back to our slides. Yes, so we're talking about Fibonacci projections. So for Fibonacci projection, this uses 3 points. We have a starting point, a middle point, and ending point. So yeah, it's not to be confused with what we talked about previously, which was the Fibonacci retracement, which only uses 2 points. So here we use namely the 61.8, 78.6, and 100% levels. And you want to make sure that you look out for this flash or lightning bolt shape that you see in the GIF here. Okay, let's look at a couple of examples of this. So here's a simple example. You can see clearly the starting, middle, and ending points follow the swing highs and lows of the price structure. So I don't know if you can see the lightning bolt shape, but following the arrows, the green arrows, and then you extend the tail out from the last point towards the ending. So basically where it ends, we're projecting a rebound off of that level. So over here, you can see the rebound occurs at what a 100% Fibonacci projection level. Here's another example with a very obvious zigzag shape again. So yeah, we've drawn out what exactly you should look out for. So you want to take note of the Fibonacci trend line following the market structure closely again, and we're projecting the price to reach this 78.6% Fibonacci extension, so that we can see it rebound off of this level. Okay, so let's see how this plays out. Um, and yeah, so you can see that price bounces off this level just as we expected. Okay, maybe I'll just pop the link for the Forex Army website in the chat first. Okay, and yeah. Okay, so here's another example. So we want to take note of this zigzag shape once again. This time we see it inverted, okay, but it's still the same concept. So the starting point would be here, middle point, and ending point. And we're projecting where prices will bounce off of in the future. In this case, if you have the 78.6, 61.8 levels shown here, you can see that price has already broken out of these levels, and that's the reason why we're projecting it towards 100%. Okay, so let's see how this plays out again. Okay, so you can see price reversed off of the 100% level nicely. Okay, so you can also draw invalid Fibonacci levels. In this case, we're talking about invalid Fibonacci retracement levels, and because this tends to be more common than a Fibonacci projection level. But one of the most common scenarios of this is when price makes a lower low. Assuming you are drawing a Fibonacci retracement from the top to the bottom, then yeah, it will make sense for you to make for price to make a lower low. I'll show you an example in the next slide. But if there are bars on the right that break your ending point, it becomes invalid. There are Fibonacci retracements that are negative. Previously we talked about Fibonacci expansions that are minus 27 and minus 61.8. So even though those break below the 0% level, those are still considered valid. Um, and I'll touch on those in a little bit. But this is the example of an invalid retracement. So price has already broken below the 0%, right? And that you see over here with the arrow. So price breaks our ending point on the right, and hence we cannot use this ending point as our retracement. So you want to always remember to pick the lowest point with nothing on the right of the ending point. Okay, now let's look at how we can combine all of the retracements and the projections that we've learned so far. Um, okay, I'll give you guys an example of um buying. So if it's the other way around, so if your starting point was here, ending point here, then it would be an invalid retracement if price breaks above that 0%. So basically, as long as it doesn't break below this 0%, then you're good to go. But we'll look more into this when we look at the charts. Okay, so let's talk a bit about Fibonacci confluence. So Fibonacci confluence is basically when you combine multiple Fibonacci retracement levels together so that you can increase the probability of your Fibonacci levels working versus a single Fibonacci level working. So it's basically combining all of your Fibonacci retracements, but also with your projection that we just learned. So in this example here, we have three different Fibonacci methods here. So firstly, we have the minus 27% Fibonacci expansion, which is indicated by the red arrow. That lines up with the 161.8 Fibonacci extension, indicated by the gray arrow. So for extensions, we look for a Nike tick. So this would be the shorter part of the tick, and the tail of the tick would be this black arrow here. And then we have a 78.6% Fibonacci projection. So you can see all of these levels line up closely, giving you a confluence area. So most of the time for confluence areas, we're looking for an area, like a small area, not so much a specific level. So it's okay if your levels deviate from each other by a little bit. Okay, so you can see price bounced off the Fibonacci confluence area over here. Okay, in this example, we have two Fibonacci methods. We have the Fibonacci extension, which is the Nike tick method. And this is the 127.2% Fibonacci extension level, and it's in line with the 61.8 Fibonacci projection level. Okay, take note of the flash shape again. And for the Nike tick, can see that it's an inverted V shape, but it's only valid once the tail exceeds past this 100% level here. Okay, and then we can see price bouncing off of this confluence area here. Similarly, here we have the same two Fibonacci methods, extension and projection. Here the 127.2% Fibonacci extension. So the Nike tick would be starting point here, ending point here, and then the tail is here. And that is in line with a 100% Fibonacci projection. So your starting point would be here, middle here, and ending point here. And you can kind of see the lightning bolt shape as well. Okay, so that all lines up in this area here to give you a reversal because of the strong resistance level. Okay, next, in this example, we use a 61.8% Fibonacci retracement that's in line with a 100% Fibonacci projection to give us a strong confluence area over here, where price has bounced off of. Okay, I think by now you kind of get the idea. It's basically just finding a bunch of levels that line up to form a stronger resistance or support level. So in this example, the minus 27.2% Fibonacci expansion, which is in blue, lines up with the 127.2% Fibonacci extension, which is in purple. This is also the inverted Nike tick. So the head would be here, or rather the shorter part of the tick is here, and then the tail is here. That all lines up with a 100% Fibonacci projection to give a strong confluence area below here. Okay, so for Fibonacci expansions, if you were here for our previous webinars on expansions, you will know that for expansions, we're looking for a flash shape or zigzag or lightning bolt shape. So that's really similar to what we look for when we want to use a Fibonacci projection that we're talking about today. So typically, you would be able to use the Fibonacci expansion and the projection together. And how that would look like would be something like this, just without the purple arrow. So for an expansion, you would take the starting point and the ending point to be the first line of your lightning bolt shape. And then your projection would be the V shape that follows that same shape. Okay, I hope I'm making sense, but you can kind of just see it over here on the chart. Um, okay, so in this example, we have a swing low support over here and one long-term 100% Fibonacci projection that is in line with another short-term 61.8 Fibonacci projection. So that makes a strong confluence area over here where price bounced off at 81.084. Okay, so you can see price bounced off after this 61.8% Fibonacci projection line up with another Fibonacci projection. Okay, so following our Fibonacci techniques, trade management is also super important. So what we typically recommend is to place your stop loss beyond your key confluence area and your take profit before it. So for stop loss, the reason to place your stop loss beyond it is because more often than not, price is attracted to such strong areas of Fibonacci confluence. So if your stop loss is right before instead of beyond that confluence area, you'll most likely get stopped out before the market reverses. So that's also one of the reasons why people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. So for take profit, we recommend to place your take profit before a key Fibonacci confluence area because there is a high chance that it won't be able to go beyond that level. So instead of reaching your profit target, it reverses back to your entry or even worse, your stop loss. And that's why people complain that the market is being manipulated because they might miss their take profit by 1 or 2 pips. So you can see in the example I've included over here exactly how you should place it if you are going in for a buy entry. So the opposite, if you're going for a sell entry, it will just be the opposite. Okay, now let me pull up my charts and then we can take a look at some live analysis. Okay, feel free to let me know in the chat if you guys have any requests for any charts that you'd like me to go through. Okay, let's go ahead and maybe we'll start off by looking at gold first. Okay, so let's start off by looking at the higher time frames first so that we get an idea of what the general trend is. So on the weekly time frame, we can see price moving upwards. Okay, so we start off by looking for any trend lines or trend channels. I don't think we have a trend channel here. Okay, actually we do. So what makes a valid trend channel is if there are two touches, at least two touches at the top and at the bottom of the channel. Okay, so we have an upward trend here. If we look at our daily time frame now, okay, you can also see that um it's moving in an uptrend as well, also in an ascending trend channel. Okay, so let's add some support and resistance levels here. Okay, so here would be my first support and my first resistance here. So I typically will try and look to see if I can pull it back as far as possible so that we can see how significant that level is. Because the more times price has tested that level, the more likely it is to reverse off of it again. Okay, so this would be my second support. And then my second resistance would just be at this week high. Okay, let's look at our 4-hour time frame. So on our 4-hour time frame, we can see that price recently broke out of this ascending trend line, or descending trend line, sorry. Okay, so that gives us a bullish signal, especially because our daily and weekly time frames all gave us bullish signals as well. Okay, this was my first resistance, and then my second resistance is here. Um, I will place my first support here because we have two swing lows. You can see price testing it a lot, but it's cutting too many candlesticks here. So it's not a good support level to use. Okay, I'm gonna place a intermediate level here. And my first support would be here. Okay. So now we can go in with our Fibonacci levels. Starting off, I can see that we have a Nike tick shape here. Okay. So I'm gonna use Fibonacci retracement. So for retracements, we use the 100% levels. So 127.2, 161.8. And you can see that um price is currently testing that 127.2 in line with the first resistance, and the 161.8 is also in line with our second resistance. Okay, and for our projection, you can see this lightning bolt shape. So I'm gonna use this trend-based fib extension. That's what they call it on TradingView, but I think if you're using MT4, they call it something else, but it's the same shape, the same symbol. Okay. And we use 61.8, 78.6, and 100%. Okay, so this 78.6 lines up nicely with my intermediate resistance, and 100% also lines up with my first resistance. So I'm just going to keep those two. Then earlier I mentioned that typically if you can find a lightning bolt shape for your projection, you can use it for expansion as well. So for your expansions, we're looking at the negative numbers. So and you can see that they line up nicely as well. Okay. Okay, I'm gonna look for a retracement from here to here. For retracement, we look at the mid-range levels. Okay, so we can see the 61.8 lines up with, lines up with the intermediate level, and the 78.6 lines up with my first resistance. So I'm just gonna keep those two levels. Okay. So we can see we have three levels lining up over here. Actually, we have four levels lining up here. Okay, at our first resistance. So that area is likely to attract price. And it also goes back pretty far. So that's why when we're looking for levels, we want to push it back as far as we can without cutting too many candlesticks. Okay. Yeah, so we're seeing price testing our intermediate level now because it does have two levels lining up with it. So it is a confluence area, but it's not as strong as the first resistance. So we'll likely see it break above this level and head towards our first resistance. So now let's support this analysis by using some indicators. So I like to use Ichimoku and MACD because at one glance you can see exactly what the signals are. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it also supports our analysis. And let's look at RSI and stochastic. Okay, RSI is also moving in an ascending trend line. Okay, but stochastic isn't telling us much. Now let's look at Bollinger Bands. Okay, you can see price pushing above the upper band. So it is also giving us a bullish signal here. Okay. I think there was a question about if it is an uptrend. Um, if you'd like the recording, I think it will be better if you email IronFX, and they will probably send it over to you after this webinar. Because I don't have access to the recordings. Yep, so there was a question, if you're buying, will you trace from lowest price movement bottom to top? So if you're looking at a retracement, you would look like you would probably do something like that. And then retracement would be the mid-range. So we're looking at these levels. So yeah, bottom to top. So your 0% would still be at the top and 100% below. Okay. Do you guys have any requests for any charts you'd like me to go through? I think we have time for one more chart. Okay, let's go ahead and look at um let's look at DXY. Actually, let's look at AUD. Okay, so on our weekly time frame again, you can see prices dropping. Okay, we see prices moving in this descending trend line. Okay, on a daily time frame, mm, on the daily time frame, there isn't really any trend channels or trend lines, but it is, I wouldn't say it's a downtrend either. It's kind of ranging. Okay, so let's just go ahead and add some levels. So this is my first support. Then my first resistance will be here. And then I just place my second support somewhere here. And then of course at this swing high, that would be my second resistance. Okay, now let's look at our 4-hour time frame. Prices are also really kind of ranging as well. In fact, let's see if, okay, no, there's no trend channel. Okay, so we have a support level here, and let's see if I can pull it further back. Okay, no. So this is my first support, and you can see that it's an overlap support, which basically means that there are swing highs and swing lows that line up with that level. Okay, and then my first resistance would be here. Okay, this would be my second resistance, and my second support would just be here. Okay, I think you can see price moving within this channel here. I think we would continue to see price kind of testing this area. Um, but let's just do some analysis anyway. Okay, so starting off, I'm gonna look for a retracement so I can see that price lines up, or rather this first resistance lines up with the 23.6. Yeah, I think the 38.2 as well. Okay. Um, okay, we don't have any projections. I think that's all the levels that we have. Oh, okay. So if we zoom out, we also have this retracement here. Okay, so um my 61.8 lines up with my first support, 78.6 lines up with my second support, and yeah, so even though this 38.2 lines up with the second resistance, we can't use it because price has already broken out of that level. Same goes for this 50%. So we can only keep our 61 and 78. Okay. Okay, and my 61 also lines up with my second support. Okay, now let's look at our indicators. So price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. Okay, so you might want to go for a sell from where price is at now to our first support. Since there is quite a bit of resistance at this level here. Okay, because we have two swing lows here, and can see price testing that same level with the 61.8 as well. Let's look at RSI. Okay, not much. Let's look at moving average as well. So moving average, what I like to look for when using that is looking for any of these crossovers. So crossover basically means that there is a change in trend. So over here, we could see price moving upwards. The minute we see price crossover, that's a signal that the trend is going to change, and then we saw price drop after that. So we could be seeing price continue to drop as well, or until it crosses over again. Okay. So yeah. Okay. Let me know if you guys have any questions. If it's all good, I think someone requested for my LinkedIn, so I'll pop that into the chat now. And yeah, if there's no questions, that's all the time we have for today. I hope you guys found it helpful, and I will see you guys next week. Thanks, everyone. Bye. Bye.